What's up, guys? Mike here, head trader at True Trading Group. Today is May 22nd. We're coming up on Memorial Day weekend here pretty soon. And with this video, guys, I'm going to go over with you a helpful little discussion, really, with stop losses. Because there is a very, very common misconception with stop losses and how to use them properly. And it was a topic that came up in chat today with one of our members. I was very, very inactive today, guys. You can see I have OBLN up on my screen. It was kind of the wild roller coaster ride, small cap today. Huge moves in both directions. It was really a wild ride. But I was really inactive today. I'm publishing an options course for True Trading Group. So if you guys may or may not know, I have a full trading course curriculum available on the website, beginner courses and advanced courses. I wrote all those courses myself, and now I'm in the middle of publishing a course about options. And I'm just putting the finishing touches on it because we're going to be going live and launching that curriculum over the weekend. So I've been just kind of, the market was a little bit slower today. So I focused a lot on that and kind of just, putting the finishing touches on that course. So I'm going to take the time to make this video and talk to you guys about, like I said, a topic that came up in chat, and it's about stop losses. Because the misconception that a lot of people have is they say, okay, well, you know what, I'm going to enter a trade, I'm willing to risk 5%. Okay, and they buy the stock and they set their 5% and they set their stop loss. Then they get stopped out. And then 20 minutes later, the stock goes higher, and they're like, oh, man, what the hell? I have such bad luck. You hear people say, oh, the market makers saw my order. They stopped me out on purpose, and then it went higher without me. It's not what's happening. Okay, it's not that you have really bad luck. It's not that there's market makers that are out to get you. Yes, some market makers have something called level 3, which will allow you to see depth in all the order flow. So, yes, technically they can see stop losses, but they're not going down and stopping out your 1,000 share order, just to rip it back in your face and say, ha, 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 got you. Okay. The reason why that happens to a lot of people is because, and even with what I'm going to share with you, it could still happen. It's just part of trading. Okay. Right. But there's something that I want to talk with you to make sure that you really understand how to use stop losses, because it came up in chat and it's a very big common misconception. So here we go. Okay. You do not, set your position size and then adjust your stop loss. It's the other way around. You set your stop loss and adjust your position size. And what I mean by that is you have a lot of people that will say, okay, well, you know what? I'm willing to risk $500 on this trade. So then what you have somebody does is they go ahead, they buy the stock, and then they just set their stop loss wherever $500 loss would be. Why is that a problem? You say, Mike, well, they're sticking to risk management. No. What you're doing is arbitrarily setting a stop loss. Okay? You need to set your stop loss first and then adjust your position size so that the risk from the entry down to that stop loss is a dollar amount that you're comfortable losing. If it's $500, then you figure out where your stop loss needs to be based on your entry, and you adjust your position size so that that risk equals $500. Because now, let's just use this OBLN since I have the chart up. Let's use this as an example. Okay, so let's say OBLN, okay, here we are, and let's say you decided that you were going to enter this stock right here. Okay, we're just making this up, arbitrary, right? Let's say here's your entry. And at this entry, you said, I'm willing to risk $500. So you figure out, you calculate with your share amount, you calculate that. Right here, this line right here, this is $500. So you buy the stock here, okay, so you buy it there, and then here's your stop loss. Well, here we go, OBLN comes down, and oh wait, look what just happened. Look at here. You just got stopped out. Okay, you just got stopped out. And because what you need to have here, guys, is you need to set your stop loss where the support level is. Okay, I'm just using this as a complete arbitrary example. Okay, you see the support level here at 83 cents. Let's go out to the daily chart, and you can see 83 cents is also the 50-day moving average. Okay, it's also the 50-day moving average. So you've got some support there. You've got a double bottom gap up. Okay, at the 50-day. So there's your support level. If you just arbitrarily set your stop loss, okay, because you're only comfortable risking $500, then you're going to get stopped out, and then that happens. Okay, and your stop loss will trigger, and then that happens. What you need to do is figure out, okay, if this is where the support level is, then I need to set my stop loss here. And you calculate how much position size would a move down to here result in a $500 loss. If $500 is the amount of money that you're okay losing, okay, that is how you set your stop loss. You don't just arbitrarily say, okay, you know what, I'm comfortable risking 5%. Or I'm comfortable risking $500. As long as the risk reward is there on the trade, meaning like let's say you're risking, like, you know, another thing that this applies to is really, really volatile small cap stocks, like the low float stocks. This really applies to them probably the most, okay, because traders will get involved in these you know, the real high volatile low float stocks, and they just set their stop loss because they're only risking 5%. Well, what if the support level is 10% away? If you set your stop loss at 5%, you're going to get stopped out, and the stock hasn't moved. It's still consolidating within a pattern. It's still consolidating. Okay, and you're going to get stopped out while nothing's going on. The stock is just consolidating. You've got to set your stop loss directly below that support level that you're identifying. And as long as the risk reward makes sense, meaning your entry point versus where the stop loss is, so just below the support level, as long as the potential upside, if you're right, the potential upside where your profit target's going to be, as long as that's like, you want to try to get it to like 2 to 1. So like, let's say your downside risk is 5%. You want to make sure your upside potential is at least 10. Okay, if your downside risk is 10%, you want to make sure that the upside potential is at least 20. Okay, preferably you want to try to get maybe to 3 to 1 as often as you can. Okay, but at least 2 to 1. So as long as that risk reward is there, that's how you go about setting your stop loss. And then you change your position size to equate that. You don't just say, I'm going to risk $500 on every single trade, and I'm going to buy the same amount, the same size, or, you know, I'm comfortable with $5,000 positions. And you're just going to buy $5,000 positions every single time, and you're going to set your stop loss, okay, so that you're risking $250 every time. You're no way you can be profitable doing that, because every trade is different, every setup is different, every support level is different, and you need to set your stop loss in the appropriate place based on the chart pattern that you're trading. And if you set your stop loss above that because you arbitrarily pick a percentage, you're going to get stopped out, that support level is going to hold, and the stock's going to continue without you. So I wanted to come on, talk to you guys a little bit about this. We talked about it in chat today. Okay, it's a very common misconception that a lot of brand new traders make. Rather, when you're entering a position, figure out where your stop loss needs to be based on the pattern and set up your trading, and then adjust your position size so that you're comfortable with that dollar amount risk on the trade. That's how you properly set your stop loss. Okay, I hope this helps, guys. I'll see you all in chat tomorrow. Take care.